Yo, what is good, you fuckers? This is the 9 a.m. candle range model, or I call it the freedom model because it's a model for life and it's how I dropped out of school at 17 and make 10k a month, but that's besides the point, right? So, I'll be talking about how you can create your own model and what mine is. So, this is just a trade that I fucking took yesterday. I'm 17. This is just some of the payments, whatever, right? Um, this is one of the clients, 3 bags, 4 months of teaching, whatever the fuck. But I'm here to provide you with value, right? Disclaimer: strategies do not make you profitable. You're a fool if you think there's a certain holy grail strategy. Fuck no. The problem is not the strategy, it's you. You can make anything work. It's about having an edge and experience with good psychology, right? I know pattern traders who make more than you. Why? Because they have an edge in their certain strategy that they've mastered and can apply to any market condition. So, this is you right here. This is you anytime you enter. You don't have good psychology or market experience. Don't expect this video to be this, game changer for your profitability. And if it is, you can fuck off. This is going to be a long, detailed, low dopamine video. The only people who use it for their use are the disciplined and dedicated. The breadwinners. We're a group of people, me and Nix, who give a full roadmap with free FX replay, free journals, full free blueprint to profitability. And that's all in our Discord. That's in our WAP. You can do whatever the fuck. I don't care, right? It doesn't matter. Um, but first, I'll be talking about the basics of turtle soup, which is the backbone to the model, and then I'll be talking about my freedom model, or the 9 a.m. candle range model, as the title has said, and why it's the best model out there, in my opinion, right? So, what is turtle soup, right? Before you even start watching this video, I want you to have knowledge of ICT concepts, Romeo and Sham, and I have a full guide in my Discord if you want. It is the holy grail, for some people, of trading that ICT rarely touched upon, that is proven to prove the highest win rate in the world if used correctly. It's a forced breakout of a range, and all expansions happen because of turtle soup. And every PD array is a lower time frame turtle soup. So what does that mean? Right? So let's say we have a range here. It's where price trades up and takes out the resting buy and sell orders, the liquidity at resting highs and lows, and acts that it uses that liquidity to act as a catalyst to reverse. And it stops out any breakout pattern traders going long here and uses that as liquidity to reverse. Goes below an old low, takes out liquidity, reverse. Goes below above an old high, takes the liquidity, reverse. Market chases liquidity of highs and lows to turtle soup before expanding in the opposite direction. Right. Importance of turtle soup. Right. Filling out inefficiencies and balancing price is another form of turtle soup. It's not why price moves entirely. So, note the importance of turtle soup. Turtle soup happens before every single big price move. Right. The manipulation takes out resting liquidity, buy and sell stops, of retail traders at highs and lows, and this then acts as a catalyst to reverse in the opposite direction. Price merely moves and draws to liquidity pools in the market where ranges can either be broken through or get turtle souped before expanding. Boom. So how do we learn turtle soup? Right? So now that you've understood the importance of turtle soup and what it is, and I'll be going through it in more depth, and you most likely clicked on this video because you already know what the fuck it is, you must enter this learning experience with a clear mind and a blank slate of any bullshit market structure shift knowledge, right? Patterns, support and resistance, indicators gone. Strictly time and price. And you can add this into that if you want, but boom. Rules for turtle soup. Buy low, sell high, never sell below a low, and never buy above a high. That seems very fucking obvious, but I'll explain it, right? It's not obvious. Take into account the market profiles. Are we ranging or are we trending, right? Always monitor higher time frame price action. Otherwise, you're just pattern trading turtle soup and you'll get fucked over. And always be on the lookout for SMTs. Let me explain why. Alright, look at any market. NQ, Euro USD, USDT, everything. Observe all expansions. What do they all have in common? Every single expansion occurs because of liquidity being taken out. The key is liquidity. Market chases liquidity. Every expansion occurs because of turtle soup. Market taking out liquidity before using that as a catalyst to reverse. Using the fuel of liquidity that is just gathered as a catalyst to reverse and expand. I challenge you to find a single expansion that doesn't have a turtle soup just before the rally, or a turtle soup on the correlated pair, because sometimes it doesn't look like it's a turtle soup, but on the correlated pair it is. Boom. Range versus trend. Remember that a range and trends aren't this clean looking 100% of the time. But remember, market can only move in two ways, ranges and trends. High time frame bullish trends, remember, high time frame bullish trends have lower time frame bearish trends and ranges, and a manipulation leg in and of itself can be a lower time frame expansion. So this is just an example of a range. We're ranging. First breakout of the range, turtle soups this entire, all these resting buy and sell orders, these relative equal lows, takes it out and uses that a catalyst to reverse. Boom, boom, bam. All right, so next. Oh, for fuck's sake, who the fuck is adding shit to my fucking slides? I'm gonna have to fucking edit this out to fucking YouTube now. What are you doing? Bro, I'm not adding this shit, you cunt. Alright, here's a quick example, right? I'm going to go through this later, and right now you won't understand it fully, so I'll give you more examples later, but this is just the gist of how my strategy looks, right? So, this is the Nasdaq on the 4 hour. As you can see, the 6 a.m. candle gets turtle souped by the 10 a.m. candle with an SMT, taking out liquidity before reversing. This is what it looks like on the 15-minute. Manipulation time, accumulation, manipulation at a key manipulation time, which turtle soups at a key level with SMT to take out the liquidity prior to reversing, taking out all these low resistance liquidity, targeting buy side liquidity and the 4 hour candle range high. As you can see, the entry model, I entered off the order block at the macro of 950 to 1010, targeting the 4 hour candle range high. Boom. So, what does my strategy consist of, and how do you frame your own? Well, first, before you even think about the entry model, the execution, the setup, the timing, what sessions do you use, you must understand logic behind your trade. Why do you trade it? How do you get the highest win rate? Well, you need bias. You need draw on liquidity. So that's what I'll be going through first. Boom. But before that, you must understand this. Every single ICT trader needs to understand this and drill it into their brain. AMD x turtle soup, or a accumulation manipulation distribution, or you could call it power of three, right? My job isn't to explain AMD. You should already know that from the knowledge of ICT and any previous videos. But in short, market can only delivers in ranges, which is consolidation, or trends, which can be expansions. However, it can be interpreted in the market in three ways. Ranges, or consolidation as we call it, is normally market generating interest / liquidity before an expansion. We call this accumulation. It's not really moving in any certain direction, it's just consolidating, right? After accumulation, we trend, normally on a smaller scale or time frame, to take out some form of liquidity, turtle soup, before expanding in the opposite direction. We call this manipulation. This manipulation induces people into the market to get stopped out of liquidity to act as a catalyst to reverse. It induces buyers into the market for them only to be used as liquidity to then reverse, right? After a turtle soup has occurred, or manipulation has occurred, taking out all the resting liquidity of the accumulation, the highs and lows, and the induced people, we then expand in the opposite direction. We call this distribution, or an expansion. Manipulation time. Like explained before, my job isn't to tell you the manipulation times. It was explained in my previous videos. However, my strategy mainly utilizes an intraday manipulation time perspective, which are the ICT sessions. More specifically, the AM sessions for indices. Sessions are the times where market is very volatile, and you should always be trading these because it has a high win rate and a better RR. Expansions always occur in certain sessions, like AM session for example, and what do we get before expansions? Manipulation. And in every manipulation there has to be a turtle soup and accumulation. So you don't get an expansion without manipulation, and you don't get manipulation without some form of accumulation. AMD has to be within the market. And to get an expansion, you have to get manipulation. And in manipulation, there has to be a turtle soup. At least taking out the accumulation phase. So what does this mean? So that means sessions are when turtle soup occurs. So how do we trade off a turtle soup to catch huge expansions? Framing a bias. First thing you need to do is frame a bias, right? I already explained that's how you do it, but how do we know if it's a turtle soup or it just is a breakthrough, right? It's a breakout. Well, we do one of two things actually. But how do we know if it is a turtle soup and it doesn't just break through a high or low? Well, we need bias, we need narrative, we need logic behind the trade, which will take me to higher time frame bias and market profiles. Boom. Market profiles. The market can only move in two ways, as explained before: ranges and trends. A bullish trend where lows are being rejected and turtle souped, and highs are being broken through and closed above. And in a bearish trend, highs are being turtle souped and rejected, and lows are being broken through and closed below. When bullish, we want to see a low being rejected, or we could say turtle souped. It shows the intention of going long, and then we reject highs. Broken through highs. Highs are then being broken through, which shows a continuation of that intention, right? The first breakout of a range is usually fake. And let me just give you an example. Institutional order flow, right? This is another way to frame your bias. It's basically the same as market profiles, but you can do both to kind of balance it out, to kind of like if it's a better social cue for you. But ICT teaches order flow like this in PD arrays. It's the same exact concept, but with two different outlooks, right? The market can only move in two ways: trends and ranges. Yeah, bullish trend, where bullish PD arrays are being respected and being used as a catalyst to continue the trend, and bearish PD arrays are being cut through and disrespected. Bearish PD arrays are being disrespected and used as a catalyst to expand, and bullish PD arrays are being cut through and disrespected. For example, here, that's where we get our smart money reversal. And bullish PD arrays, for example, this fair value gap, are being respected and used as a catalyst to continue up. But bearish PD arrays, like this fair value gap here, like these fair value gaps, this order block, completely just being disrespected and cut through, right? So you need to be like, what PD arrays are we respecting? We're respecting more bullish PD arrays or bearish PD arrays? And a lot of the time it's hard to determine that if we're ranging. And my next video will be teaching you how you can enter in any market conditions. But first, I'll teach you the strategy. Alright, boom. Top down and out. Oh, for fuck's sake. Who the fuck added this photo, you dickhead? If you're watching, oh my days. Okay. Top down analysis using CRT. I'm not recording this again. I'll go through this later in the examples. Other than that, I've made 3 videos on CRT exactly. Do the work of going through that. You most likely clicked on this video because you just don't know how to put your knowledge into a strategy. So I'll go through that. Okay, so boom. This is an example of a trade I took, or a trade you could be taking. This is also an example of a way of viewing bias, right? So lows are being rejected, highs are being broken through. CRT lows being rejected, highs are being broken through, rejected, broken through, PD arrays being respected, like the other example. Boom. Alright, boom. I will be going through CRT bias and how you can use CRT as your bias, but I'll go through that in my examples instead of making slideshows because it's easier. But other than that, you should be focusing on the order flow, you know, the market profiles, which is extremely useful. Then we go on to timing. Before you execute anything, you must enter at a certain time. You don't just enter at random times in the market. You must have a set in place time that you trade, otherwise it wouldn't be a strategy. And I'll be going through the time that I go through. So this is also how to create your own strategy, so you don't have to use mine, but ICT sessions and kill zones. Familiarize yourself with this, right? You can screenshot this. Get used to experimenting with time-based models, e.g. Shams 3 AM model or ICT silver bullet model, right? Time then price, because expansions and volatility happen at certain times, right? You can see all the confluences in the world, but if it's an Asian session, you are cooked. So certain things are more prone to happen, and manipulation and high probability price happens at certain times because that's when the smart money is involved, right? Characteristics of AM session. When market opens at 9:30 a.m. after news embargo lifts at 8:30 to 9:30, it does one of two things. It either continues in the direction market was going to before and plays out early expansion, most likely 8:30, or it manipulates for a certain length of time before taking out a significant area of liquidity before expanding. And that can be in the direction of 8:30 or not in the direction. But when market opens, it can either manipulate or it can distribute. And this manipulation doesn't have to last 30 minutes. You know how people say, in my example, 9 to 9:30 is accumulation, 9:30 to 10, a 30-minute is manipulation, then 10 to 10:30 is distribution. That's not always the case. A lot of the time, it can be 9 to 9:30 accumulation, and 9:30 to 9:40 is the manipulation, and then the expansion's at like 9:45, right? But these times vary. It all depends on if there are correct key levels and if there are correct SMTs in place, right? You're not just going to pattern trade, 10 a.m. equals expansion. No. Fuck no. Because you're not just going to randomly trade when 10 a.m. hits. You need to have bias. You need to have the correct total sweep. You need to have SMT, higher time frame to lower time frame, CRT to confirm that it's the right time to enter. All of that shit. Now for macros. What are the macros that I personally use? I personally don't trade news embargo lifts 8:30 to 9:30. I wait until the first macro of market open, which is 9:20 to 9:40 macro, and the 9:50 to 10:10 macro, and the 10 to 11 a.m. silver bullet time, which isn't really a macro, but yeah. But macros are times in price that are more likely to spool to draws and liquidity. So either we can get a high probability turtle soup, or just a spool or catalyst reaction towards a certain draw on liquidity. I personally don't trade 9:30 to 9:20, even though that is when AM session technically opens. But remember, play around with the timings, macros, my times, macros. Strategies won't work unless you backtest it and refine it to see what works for you. I'm just giving you what works for me, right? So those are the times. So I'll give you 1-minute examples of all the macros that I've used in these past trades that I've taken in the past like 2 months, for example. So look at this. Prices accumulating from 9 a.m. and even before 9 a.m. accumulating at 9:30 or in the 9:20 to 9:40 macro. We then get a manipulation taking out all that generated interest, at least the accumulation, which is turtle soup, and we get SMT, and it's taking out the 1 hour candle range high. And to confirm that it's taking out the 1 hour candle range high, we look at the lower time frame CLT. This is the 15-minute low, 15-minute high. Manipulation takes out the resting buy and sell orders at the key time with SMT, change in state of delivery, enter off the order block, stop at these highs, TP at the 4 hour candle range low. Boom. Next, you can see it again. The same examples. Pause this video and try to see as much as you can. Same example. Boom. Again. See, this is an interesting example. I got this bias completely wrong, yet I still profited. Why? Because I followed an exact criteria. And if you follow your exact criteria and strategy, a lot of the time, even if you get your bias wrong, you will still profit somewhat, right? And I've profited fully here. And I'll go through an example of how you can trade manipulation and how you can make sure you profit even if you're trading manipulation, right? So this is another example. Why did I not enter at 9:45 even though the purge happened then? Think about that, right? 9 to 9:30 accumulation, that's clear accumulation. We then manipulate and take out the accumulation, but we didn't get any SMT at those lows, and it was against my bias, so I wasn't taking any longs. But even if I did take longs, knowing that this was manipulation, I still would have profited to at least this high, because I knew that was the drawn liquidity. But at 9:45 we took out this high, and we got SMT at that high. and it took out the accumulation, key level, or this is could be classed as a lower time frame key level with SMT and all my entry criteria, but I still would not have profited. I didn't take this trade. Why? Because the purge happened at 9:45. It didn't happen at a macro, right? So then I waited for price to then form some turtle soup again. We got SMTs at these highs, stacked SMTs, which is really good. Entry criteria, boom. Next, same thing. You can just dissect these, pause them if you want, but this is one that I called. This is, yeah. I mean, you can call me fake, but this is like live. So now that you know timing, you must understand setup. So this is what every single trade should look like, right? Obviously, we know that we need to trade expansions. And for expansions, we need to have a manipulation. And because of manipulation, we need a turtle soup. But we need a turtle soup at a certain time, which is the manipulation time. So market is moving, manipulation time hits. We manipulate into a key level, turtle souping some form of liquidity, which is normally accumulation from 9 to 9:30, and CRT highs, CRT lows, at a manipulation time, at a key level, with an SMT, waiting for our entry criteria to then go long. Right, this is what all your trades should look like. What are the elements to a high probability trade setup? Plan the higher time frame key level, mark the manipulation time, mark the pre-manipulation liquidity pool, and remember, 2 and 1 are more important than 3. So boom. Elements to a high probability trade setup. You know that we get manipulation and then market trade. If let's say our bias was bearish, we now want to wait for some high to be turtle souped before we go short, because we know we want to short at highs. So then we wait for our market open. We then manipulate at a pre-manipulation liquidity pool at a key level, then wait for our entry criteria, hopefully an SMT with order block, and enter short. It's simple, right? But now it goes on to the entry model. What is my entry model? Well, it is the sequence, more specifically a change in state of delivery or an order block. Some people like trading inverse fair value gaps because it's more safe, and they want to de-risk. They like trading higher up. It all depends, but this is mine, right? So what is the sequence? Combining this CRT with the sequence, everything begins with a turtle soup and everything ends with a turtle soup. The sequence objectifies and simplifies entries. It's an entry system that plays out on every expansion, so you'd be a fool not to use it, right? It consists of different steps that play out in the lower time frame to trade every higher time frame CRT range. It includes, obviously, the CRT being turtle souped, the change in state of delivery, which creates an order block, OTE, optimal trade entry, continuation, kiss of death, and CRT opposing turtle soup. You can see it here, boom. This is just examples from Sham. You can pause this if you want. I've already been through this on my last example, but yeah. Boom. So, SMT, smart money technique. SMT is the GOAT when it comes to market. I used to never trade SMT. I didn't even know what it was until I started trading NQ. If you don't trade SMT, I don't know what you're doing. This bumps up your profitability like crazy. I am telling you. No SMT, no trade. Simple as that. SMT is the indicator for an end of manipulation, and it's now the indicator that we want to start expanding, right? Just like every expansion has turtle soup, it also has SMT, right? It is a crack in correlation where one of the correlated pairs has a turtle soup and one doesn't. I'd recommend watching, ICT or Trading Day in detail about it, but this is the Breadwinners Discord, boys. It's free. We have full guides, all resources, leaked courses, free FX replay, free journals, everything you need, executions channel, main chat channel, live callouts channel, and we have the premium section, which has all of our models, personally, me and Nix's, and everything you need to become profitable. This server is a full roadmap for anybody beginner to advanced to become profitable. All right, boom. Example. So as you can see here, this is the daily time frame, and this is very recently on the Nasdaq. I judge that price on the daily, our market profiles are clearly bullish. Why? Because we're total sweeping lows of rejecting through highs. Oh, sorry, rejecting lows and breaking through highs. We broke through previous day candle. This candle, however, looks like it's going to turtle soup this. However, it's already taken 50% of the range. Just because a candle wicks above previous candle, which is an indication of turtle soup, doesn't mean that it has to go all the way to the bottom of its range. That would just be pattern trading it. You need order flow, you need context behind it. Well, number one, it's already hit the 0.5 mark of the first candle. And number two, our market profiles are bullish and our weekly drawn liquidity is towards this high. So I still think it will be bullish. So now that I think it's bullish, that means I need to look for turtle soups at lows before I go long. Boom. And you can clearly see, boom. Second candle, it ranges in between this candle. It doesn't really do anything. You could have taken a long, you could have also taken a short. Depends on not just the daily. But we ended up running out this high the day after, right? So it never came down here, right? Because number one, the higher time frame narrative is bullish. 0.5 of the range is already taken out. Lower time frame turtle soup of this is SMT by the way, indicating bullishness, and we had bullish market profiles, right? And just another thing, don't rely on just the daily to take trades. If you're entering on the 1 minute, then your trade's gonna last 15 minutes to an hour. So then why the fuck are you using the daily? Or why the fuck are you only using the daily as your confluence? Are you fucking retarded? So okay, here is how you could have placed an entry on this day. Or I think it was here, maybe, I don't know. Yeah, it was this. Oh no, it was the day before. So where could you have framed a trade? Remember, this is the high that was taken out. We already went to the 50% range, and our market profiles were bullish, and we had a huge SMT confirming that it was the end of the manipulation, and we most likely weren't going to come down here. So now we look for a turtle soup at lows with SMT before looking for longs. What did we see here? 2 a.m. candle forms, 6 a.m. candle, which is from 6 till 10 a.m. wicks above previous candle's low, and then the 10 a.m. rallies to the third candle's high. Right? How could you have framed an entry? So this is the 1 hour. The 1 hour is the same thing, right? 1 hour takes out this kind of range low. This is the 4 hour kind of range high, 4 hour kind of range low. But also there's micro CRT within the 4 hour candle range low, which is the lower time frame CRT. This candle turtle soups this 1 hour's candle. This can also be used as drawn liquidity, which confirms that the lower time frame will be in alignment with the higher time frame, right? So this is why you don't use one time frame to dictate your bias. Using the daily candle will give you like 60% of the time where AM session will most likely go. But you need more context. Remember, we are intraday traders. I trade the 1 minute, the 3 minute, the 5 minute. Therefore, treat the 1 hour and 4 hour candles like the daily, and a whole new world will open up to you. Boom. So now that I've got my turtle soup at the 4 hour candle range low and the 1 hour candle range low, we even get lower time frame CRT of the 15 minute, confirming the 1 hour will turtle soup, and the 1 hour confirming the 4 hour will turtle soup. With SMT, because no SMT, no trade. And we can clearly see this is where the manipulation time starts, from 9 a.m. or 9 to 9:30 in this case, right? It can vary. And then the expansion at 9:45 to 10 a.m. all the way through till 10:30. Yeah, and here the lower time frame 15 minute CRT within 1 hour CRT. So remember, I dictated that our bias was bullish. The 4 hour confirmed that. The 1 hour confirmed the 4 hour. The 15 minute confirmed the 1 hour, which is all in alignment. Plus we had SMT, no trade. So now all I waited for is a low to be taken out before going bullish at a correct time, which we waited for AM session, the manipulation time, lowest taken out with SMT, 15-minute lower time frames confirming the higher time frame. My fucking alarm. You cunt. Get this shit off right now. So now we just wait for our entry criteria. And that, for me, is the sequence. What is the sequence? I explained it in the other videos. Fuck off. Right? I'm not explaining to you order blocks. You can suck a dick. Boom. 15-minute CRT gets low taken out. SMT at a certain macro. We could have traded the 920 to 940 macro, but instead we waited for 950 to 1010 to come down before rallying up. Because remember, the 950 to 1010 macro is very fucking powerful, right? That's when price spools to draws on liquidity like no other fucking time, if your bias is correct, right? So we form this order block. This is the and then we trade down into here at the 950 to 1010 macro on the third candle of the 15-minute candle range low before rallying up to draw on liquidity, draw on liquidity, draw on liquidity. All this low resistance liquidity out here. And we get this insane RR. I took this trade, by the way. So that's it. Your bias, then you wait for the timing, then your setup, entry model, and execution. Remember, and this is a bonus. And this right here is a bonus, right? How to profit even if your bias is wrong. This is mainly for the scalpers, and obviously your trade style might completely differ. This depends on if you enter really early, right next to a turtle soup. If you don't, if you enter really high up, then it's probably not good. But let's say you enter very fucking close with tight stops, you're scalping, then this is just a tip for you. This type of method only works if you scalp and your entries are really tight. This is just a thing you could potentially do, but I don't recommend it for beginners and most people. So yeah, so ask yourself, where does price have to draw to even if my bias is wrong? Where does price have to draw to even if I'm trading manipulation? Where does price have to draw to or turtle soup before expanding in the opposite direction of my trade? I'll give you an example, right? But you can use these as areas to take partials or your full TP depending on where your entry is, your RR. But make sure the high or low that you know price has to draw to is still pretty far away from current price, enough for you to profit decently from it or take partials from it. That is, risk management isn't just about the amount you risk. It's about de-risking, where you put your stop, the partials that you take, right? And this is just a tip for you guys. So this is a trade that I took. As you can see here, this is like a 3RR trade, yet I still profited fully from it, even though this was clear manipulation before rallying up. I saw an SMT, a turtle soup high getting taken out. I thought my market profiles were bearish. All I needed to do is wait for a high to get taken out. A high was taken out with SMT, order block formed, tapped in, entered, targeted this low, which I knew was going to be taken out. And I waited before I closed my position. I waited for an SMT going in the opposite direction, because a lot of the time the first SMT of AM session, 9:30 market open, a lot of the time is for manipulation. But if you're a scalper, that manipulation within itself is an expansion that you can use to trade, right? So I knew price was going to draw to here, even if my bias was wrong. And that was what made me profitable. It was the risk management, the de-risking. The amount of trades that I've profited from that I shouldn't have profited from because I traded manipulation is insane. But I use this scalping strat or this partial risk management to help me. Even though you profit less from it, this is just my strat. Join the club, networking, roadmap to success, mentorship. Thank you. More on our Discord. Suck my dick.